manufacturing activity expanded for the fourth consecutive month this July, though the manufacturing sector remains cautiously optimistic. The Philippines Manufacturing PMI in July stood at 50.9, up from 50.7 in June, according to figures from S&P Global out this morning. This signals a returning momentum in the manufacturing growth, with outputs rising and subdued inflation offering a sliver of optimism among manufacturers. Despite this, the S&P said purchasing and employment rose at a slower rate, pointing to underlying caution within the sector. Overall, firms hold on to hopes of improved demand conditions, with confidence emanating among firms of higher output for the year ahead. And with us now for more from Singapore is Jingyi Tan, Economics Associate Director at S&P Global Market Intelligence. Good to see you again, Jingyi. Welcome to the program.
Good morning, Katie, and thanks for having me on this morning.
All right, so I gotta say, it should be a silver lining, right? Do you agree? I mean, that's consecutive months of an uptick there.
Well, yeah, definitely, Katie. I would say what we see with the Philippines manufacturing PMI, it's among the bright spots in ASEAN, including the likes of Thailand and Vietnam. We do see some of this positive reading, whereas contractions in output were generally seen in the others. Broadly, I would say this is accounted for by what you just mentioned, that demand itself is still growing, albeit at a slower pace compared to June. And that has actually really helped to spur the improvement in employment conditions and also just purchasing activity. But with that being said, again, the emphasis here is on things slowing down. We do see some of this still actually being well supported by the front loading, so a very diminishing but still present front loading of activity in ahead of the tariffs, as I just heard you talking about it as well. We did have a bit of extension already into 1st of August and a little bit more. But for what our data has captured, definitely there has been some of this front loading still supporting this growth.
Exactly, the front loading there. I mean, one would think that we're getting a lot more new orders because everybody's just trying to chase that moving deadline. So what impact is it having on new orders? So, I mean, the customer acquisitions, how are those coming along?
Well, at least from the comments coming through from businesses in Philippines, the manufacturers themselves, they are mentioning that this itself is actually improving. And broadly around the region, we also do find that a lot of companies are thinking of more ways to just really do promotions, do more of this marketing efforts before the tariffs itself really start to bite. And that has helped to actually keep demand situation positive in the Philippines itself. But with that being said, I think, again, if we look at the likes of the future output index, which measures sentiment, although that has actually improved from June, but June was among the lowest you have actually seen since the COVID pandemic. So I think people are starting to be cognizant of the fact that a lot of the front-loading activity has really been taking place, and into the second half, alongside our projection at S&P Global Market Intelligence, we do see the potential for more of this slowdown to actually be taking place, especially because if you talk about it, the stocks that you can actually keep in your warehouse is limited at a certain point as well. So into the second half, we could potentially be seeing some of these hangover from the front-loading so far, Katie.
That's true. It's really an interesting chart. When you take a look at the consecutive upticks, it's been gradual. So that's where the cautious optimism is. But when you look at fundamentals, I mean, beyond promotions, how do we stand out or even stick out or maybe even fare in the ASEAN?
Well, so I would say that if we look at the ASEAN number itself for the month of July, that's really, even though it's above 50, it's just above 50 itself to actually mark a rather stabilization of conditions. And with the Philippines number, as you just mentioned, at 50.9, it's slightly, faring a little bit better than the ASEAN region as a whole. I think, the picture itself, as we have already been aware of even before the announcement of tariffs, is that the Philippines will actually be relatively less exposed to the impact of tariffs as compared to the rest of the region. And certainly on the data front, we are still seeing that being the picture. But of course, I think, with that being said, there's also the impact on the rest of the region as well, and how that, the other key trading partners is going to impact the Philippines. And at this point, I can only say that I think we are still seeing a lot of uncertainty on the picture picture ahead, even though what we have heard so far, despite the fact that, the tariffs, as you mentioned, for the Philippines is announced at a rate that perhaps is higher than what the Trade Secretary would have liked, but it's still representing what is actually an optimistic scenario for us in our projections as compared to, well, there being a stalemate in terms of any kind of agreement at all, Katie.
Right, they were looking for 15%, but still remains to be seen. It's still at 19, and we did get to talk about jobs because that's the most important metric. When you speak with the government, jobs in June grew for the first time in 4 months, so that was the strongest pickup since November of last year. But how has that trended, though, in July? Did you see some more of a silver lining there, or is there also a bit of a slowdown?
Well, I would say that the picture itself is actually still very marginal growth in terms of the employment picture in the manufacturing sector. This, of course, driven by the fact that the new orders itself had remained on the rise, and you have seen a bit of building up of the backlogs. So companies themselves have actually opted to actually hire more headcounts in the manufacturing sector to cope with this. But I think one thing that I really want to caveat, and that we do see that not just perhaps for the Philippines and also across the region as well, is that a lot of these headcounts are also hired on a part-time basis. So it remains to be seen if this will be a permanent increase as well. We do see that potentially this being a reflection as well of the front-loading orders that are being sorted ahead of the tariffs deadline. So that could actually be one of the drivers. So we do have to actually again wait and see in the picture. But of course, the sentiment itself, as I mentioned, is still very subdued by historical standards. So I think it's important to see that pick up as well for people to actually be hiring, which employment typically been a bit of a lagging indicator of how the economic situation is doing.
Well, what about when we consider the leading indicator of pricing, considering the inflationary pressures or the lack thereof, determining the input and output costs?
Yeah, so that's a great point. Certainly, I think we have seen in the latest survey itself that the input price index, that itself is still on the rise, so showing that manufacturers are facing higher cost pressures, albeit at a softer pace as compared to June itself. And they have continued to actually raise charges at a rate unchanged from June. So this is actually still telling us that they're confident in terms of raising prices as compared to some of the other regions, including mainland China, where we're seeing selling prices coming under pressures just from the competition, and also the fear of new orders really slumping. From that perspective, I would say that pricing power is still with the manufacturers based on our data, but you are also seeing a picture of just really inflation not being too rapid in any manner at all. And that is also pretty much going bang in line with our projections of inflation being subdued, and the BSP themselves could potentially actually cut again, and we see that around October being the date that could happen, and that is actually really important because that will actually help to show up growth for the Philippines through the rest of this year.
All right. Well, happy to hear some silver lining in there. Jingyi Tan, thank you so much for your insights on this breaking news of S&P Global Market Intelligence in Singapore.